Hello, speaking Forex. This is Gregory. It's currently 7 p.m. Pacific Standard Time, June 19th, 2012, and this is my analysis for June 20th. And what I want to do here is I want to recap everything from Monday. If you guys saw my trade, you know I was short on the British pound. So let me quickly review that trade. If you have not seen the trade, I urge that you look at that video because I will go into more depth as far as my entry. So basically on Monday I was looking, well, I did short around this area at 57. Actually I was in at 57.18. That was my entry, and my target was the support area. I think that was more appropriate. And that whole move should have netted about 130 pips, maybe 150 pips, best case scenario. And that was my initial conjecture. But on Monday, the market didn't come down that far, and it came down 100 pips, and the market started to reverse. Now, this didn't worry me at all. I'm actually fine with this. I just knew that since the market moves in waves and this is the ebb and flow, I felt that this market was going to continue going down further. So I was looking to add on another position. Now, the market is very dynamic, okay? So you have to be able to adjust as time progresses. You want to be disciplined. I mean, you don't want to constantly change your mind, but especially if you're holding a position for another day or so, you have to be able to adjust your targets, because especially for myself, I use a lot of pivots with my analysis, and I just want to make sure, because the pivots change from day to day. And initially I was going after the 5600 area, but since the next trading day the pivot area is at 5612, there's one at 5612 and one beneath there, and I chose to be more conservative to go for the 5612 area, and I was adding on a different position, so I didn't want to encounter any volatility around this area trying to squeeze out another 20 or 30 pips. So it's not really my style, so I just wanted to make sure that I had an easy profit here. So I was short at 57.18, and so since I adjusted my target to 56.12, accounting for the spread and the slippage at 56.18, so that was a 100 pip target there. So that was a pretty easy target to be fulfilled. Now I re-entered the trade, okay, even before I hit my target. I actually added on a position here. Now we were at this pivot area right before the news session in London, and so what I was thinking about doing, initially I was just going to sell at this pivot area, but I decided to be safe since I already had a position. I was just going to sell beneath this bar. So what I decided to do is actually sell beneath the M2 area. Okay, so I was actually short at 56.58, and so I was targeting 56.18 initially with this initial entry. And so with my second entry I decided to do the same. So 56.18 from 56.58, that was 40 pips. So I was able to make another 40 pips from the trade. So overall I netted 140 pips for the trading day. And as you can see, the market reversed sharply at 56.12. I was already done. I wasn't at my computer when this happened, so I already placed my orders, and I was actually done with trading, and I had placed my stop right above this high. And the reason why I decided to do that was because it would have caused me to break even from the initial entry. Okay, if this low was taken out, this M2 area, and the market reversed, I basically would have broken even from both trades, because my first trade would have netted me about I think 20 to 30 pips, and I think I would have lost some here, so I probably would have had a small loss. In a vacuum that looks bad, but from the overall picture, risking 20 pips to make 140, that's a 7-to-1 reward to risk ratio. So when you look at things from that perspective, instead of looking at it in an absolute value and saying, oh wow, after all this time you lost 20 pips, that's not necessarily the case, because once this trade was entered, and even though I'm risking 20 pips overall. If this high gets taken out to the downside, I'm actually going to make 140 pips. So I'm actually risking 20 to make 140. So I definitely maximized my EV in that particular trading setup. So I was actually done for the day. Now here we are. We're at this area again, and I'm not going to go over the analysis because it's the exact same as it was on Monday. And so the only thing is that I'm actually trying to get a better feel on my trade. So as I'm going to make this a little darker so you can see on your computer screen, because I'm not really sure how it looks. Okay. Now the retracement area, the 89% retracement area, actually lines up perfectly with the R1 area. Okay. And so my goal, hopefully I can get short around the M3 area because it will allow me to minimize my risk. If I go short here because of my target here is actually 56.34. So it's only about 87 pips, but I have to place my stop above this 89% area, and I'll be risking a little bit too much for my liking. That's roughly, sorry guys, little difficult to see. Yes, a little over 60 pips, so I don't want to risk 60 to make 80. What I prefer to do is to get a better feel on my price. So if I can get in around M3 around 57.35, now this trade goes from a little over 1-to-1 to actually 2-to-1 with my initial risk. So I have a 2-to-1 risk to reward. So I'm gonna get rid of this Fibonacci line so you guys already know what I'm looking at. So my 89% retracement area is around this area. So I place my stop above that, and it coincides perfectly with the R1. If I get in at M3 and I target my S1 area, that's 100 pips exactly. So I'm looking to make 100 pips off this trade, and I'm looking to risk 50. So I'm looking at 2-to-1, so my break-even ratio is 33%. So this is a highly profitable trade setup in my opinion. And so we have everything from Monday still holds true. We have an AB equals CD. We have our 78% retracement. We have a resistance area already intact. So we have everything lining up that should tell us that this area should still hold. And if it doesn't, if I end up losing 50 pips out of the trade, that's fine because I'm already up 140 pips from earlier and still pretty early in the week. So we'll see how this trade plays out. So if I can get in around M3, if I can get out around here, that'll be perfect. And what I would do is I'll actually update this trade probably tomorrow or the next day, just depending on how long it takes for this trade to manifest. But since this is within the average daily range, this trade hopefully should be complete by the end of the day. So on to gold. Unfortunately, I was stopped out of this trade because of the volatility, and I was only able to squeeze out 20 pips. And so I was pretty disappointed at that because I felt like this gold was actually going to come down a little further. And as you can see, it came down 220 pips. See, it happens so fast, and a lot of times when you're not in front of your computer, you don't see this stuff, and it bounces back, and now you're just waiting. So I was actually down a little bit. The market came down in my favor, and I was able to squeeze out a 20 pip profit because I think I'm not exactly sure how that happened. I think I just placed my stop at an arbitrarily 20 pip stop area, so I think I was probably stopped out. Actually, I have to go put my records. I'm not exactly sure, but I just knew I was taken out. Maybe it was here. What time is this? Yeah, that looks about right. I think I was taken out here because I was short here at this pivot area, and I think what happened, this is a 1 hour chart, so yeah, that actually looks right. And so I think I was taken out here, and I put in arbitrarily a 20 pip stop here, and I was looking to actually hit this area, but the market came back up too high sometime that night, the nighttime for me, and it came back down and initially hit my target, but I was already taking out the trade. So that's actually okay. I wasn't really too worried about that. We were already up on the British pound at the time, so that would have been a nice trade, but unfortunately I was not able to capture that move because of the volatility. So I missed out on gold. Did a good job on the British pound. I'm looking to resell again on the British pound if I can get up to the entry level so I can minimize my risk. Yeah, so that's my analysis for June 20th. Thanks for tuning in, and I will be providing updates throughout the week. Thanks, take care, and happy trades.